Hello everyone, this is Corey Mitchell with TradeThatSwing.com for your swing trading stock market outlook for the week of March 27th. This will be a quick one, not too much has changed in terms of our overall market health. I go through the same process each week, looking at overall market health, and that determines if I will be trading individual stocks or not. You can see recent trade lists here. As we'll discuss, I am not going to be trading because conditions are just not great at the moment for this, and we'll discuss why that is. So you can see the old watch list if you want, and this one was recently updated, the best swing trading stocks list, which is just high momentum stocks at the moment. So depending on what kind of process you use for trading, may still be some opportunities there. Let's look at the price action of the indices. So our main ones that we look at here are the NASDAQ, the S&P 500, this is the Canadian index, the Russell 2000, and the NYSE. So these five right here. The other three are more just for informational purposes. So the NASDAQ, strong. It's trading up near its prior swing high here. We see the opposite in most of these other indices, where the NYSE is trading below a recent swing low. NASDAQ well above the point where it was at the start of 2023, NYSE below. That is, the NYSE is our broadest measure of stocks in terms of indices, because it covers everything that's listed on the NYSE. So small companies, big companies. It's a good indication of what the kind of average stock is doing. Let's go to the Russell. It's also trading just below these late 2022, early 2023 levels here, and we're back below them. The Canadian index, same thing. We're right near those prior lows. That's not indicative of uptrending behaviors where we're making higher swing highs and higher swing lows. Right now we've just made a lower swing low. That's more indicative of downtrending behavior. So we have a conflict here. We have three indices showing some downtrending behavior, and we have a couple indices which are still showing uptrending behavior. The NASDAQ moving well, and the S&P 500 moving well. So I guess if you were to really break this down, you could say usually the bigger cap names and technology moving better than kind of the average stock out there. But overall, this says this is a tough market condition. A lot of stocks are dropping, a few are doing well. So it's very selective, meaning you're going to have to cherry pick. The wind's not at your back when you have all these indices moving, which is going to be the easiest time to trade, when pretty much just everything is going up. And those are the ideal times we want to really be pushing capital. We do have a couple things that are working, so maybe deploy a tiny bit of capital. I'm not, but that would be up to you and your method. Let's look at the health indicators. They're also not great. This is the S&P 500 chart, and we can see this top indicator is how many stocks are above the 50-day moving average, and we can see only about 22% of S&P 500 stocks and all U.S. stocks are above their 50-day moving average. That's just going to make it harder to find uptrends. You can see when these are above, we're generally moving up. When these are below, we're generally moving down or just starting to make the turn. So if we start to turn up, these will turn up as well, giving us an indication, okay, it's time to get back in. As long as they're way down here, not my favorite time to trade. This volume, not important right now. This is the daily average movement of the S&P 500. And when we're starting to get these big 2% drops, that's usually not a great sign. We haven't got quite to 2%, but we've had lots of these drops, almost right on the cusp of 2%, showing it's still volatile out there, more indicative of downtrending behavior. We don't even have an uptrend on this chart anymore because this downtrend's been going on for so long. But during an uptrend, you'll see very small values. You won't see these big spikes. They'll just kind of flutter around this zero line, up 0.2%, up 0.3%, down 0.3%. They're very small values, kind of like what you see a little bit like over here in these areas before then we get these big spikes in there. That's, again, the spikes are more indicative of the downtrend behavior. This is the NYSE advanced decline line, advancing stocks versus minus declining stocks as a cumulative number, and it is trending lower, kind of basically what we're seeing in the S&P 500. This is up volume versus total volume, and we had a 90% downside day a few days ago. Not a good sign. So that means only 10% of the volume in stocks or less was going into stocks moving up. And so very negative sentiment out there. We did have a few high volume days, but not quite enough to get to the 90%, meaning 90% of volume was in stocks moving to the upside. That's usually a very bullish sign. So overall, the health indicators, pretty much everything, just bad, 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 bad. So that doesn't mean the price can't move higher. We're sitting at these levels. A couple are in uptrends, and we're sitting at these levels. We could very easily go higher. It just means it's not my ideal time. I would rather wait for some confirmation. The prices start moving up. The health indicators will all start turning up within a few days of that happening, and then I'd rather get in. We didn't talk about this briefly. The CAC 40 is the France index. It's still, even though it's had this big sell-off recently, you can see pretty strong uptrend overall. One of the strongest indexes over the last year. And gold and Bitcoin also really having strong periods since about March. Banking crisis, people wanting to have some hedges against banking, and also Bitcoin is money outside the banking system in the sense that you can still access it even and send money and pay people even if you are your bank is freezing your accounts or something like that. So those are doing well at the moment. Sectors on the move. Not too much has changed since last week. Communication services and technology are the standout winners in all three of these time frames, and everything else has kind of faded a little bit. So right now, those two are definitely the strongest where we'd, if we were going to trade, where we'd focus our money, and hopefully that continues if we start to see those health indicators improve, because it's nice to have clear leaders letting you know kind of where to put most of your capital. These are where we're going to see most of the big gains in these leading stocks. So we'll see if that continues once the health indicators turn. Not super important to me right now since I'm not opted not to trade in these tougher conditions at the moment. So what I'll be doing right now, nothing. I'll just take another week off from the swing trading. If those health indicators start to improve, I will definitely be getting back in. And of course, I am always day trading. It's nice to have sort of a consistent income coming in from something you can trade every day. Swing trading, as we're seeing, there's definitely weeks where we're trading, weeks where we're not trading. So it's a little more off and on, whereas day trading's, there's usually opportunities we can find pretty much every day, every week. So until next week, happy trading.